Wow, that literally might be the ugliest stock I've ever looked at. Moves so slow. No one's trading it. Why would you involve yourself in something like that if you're trying to make a return quickly? Well, ladies and gentlemen, I am here today to discuss stocks in volume, help you guys understand what you should be looking for in volume, stocks to avoid if the volume's not high enough. So this is pretty much going to be a video running you down on everything you need to know about volume and then some, as we normally do here on this channel. So go ahead, hit the thumbs up button so we can rock and roll into this video. So first thing and foremost is CEI. Here's a perfect example of a stock that is basically trading on terrible volume. If you're coming into the stock market with an objective to make money or a return on your investment quickly, clearly you're probably not going to want to put your money in something that only moves about 5 cents a day. Okay, probably not going to do you much good. So when you're trading, anytime you come across a stock that looks like CEI, that means there's like no volume, or there is so many shares to go around that even with really high trading volume, there's no big price fluctuation, okay? This would be an example of, say, GE. See, GE is a stock that trades somewhat like a barcode. Again, only really moved like 10 cents on the day. Not very easy to make fast return with a stock that moves like that. But, look at how much volume it traded. It was trading in, 500,000 to the millions at some point throughout the day, but still moved fairly slow without a really big price fluctuation, okay? If we go back to CEI, you will see that CEI only traded on some of these days, like 2,000 shares here and there, and it moves really slow. Come over to this day here, even when it traded 600,000 shares of volume, a couple million shares of volume, it really only moved like 10 cents, okay? So with that being said, normally if we come across any stocks that look like barcodes, we pretty much just leave it alone. And when I say a barcode, what do you mean by that, Connor? I mean literally it looks like a barcode, okay? If it looks like a barcode, it's most likely going to move slow, and there's not going to be a quick return on that unless you somehow just magically get lucky. Okay, so now what I want to show you guys is a stock that has high trading volume. So we're going to go over and we're going to take a look at the stock MTP. This was a big penny stock that moved today. So you can see the difference. This stock does not look like a barcode. It is going up, it is pulling back, it is going up, it is crashing, it's going up. This is a volatile environment. A volatile environment is what you need in order to even profit. You need movement, so you need volatility. See, something like MTP, if you look at this stock today, you will notice that this stock was trading in the millions of shares per 1 minute candle. So you might be asking, Connor, what is the rule of thumb for trading? How much volume do we need on any given stock if we're even going to consider trading it? I mean, the rule of thumb is so complex it doesn't even make sense to tell you, because you're going to go out there and you're going to read the rule of thumb is 500,000 shares of volume minimum to be trading a penny stock. And what's going to happen is the penny stock was trading on like maybe 100,000, and then all of a sudden it blows up and now it's trading on 500,000. So if you are finding yourself scanning for stocks, honestly, scanning for stocks that have a minimum trading volume of 500,000 really won't even point you in the right direction, okay? It's not really necessarily about how much volume a stock is trading on at that moment. It's more or less what's going to attract volume. So news will attract volume. The right pattern will attract volume sometimes. But yeah, you could basically say the rule of thumb in the market that you're going to hear is minimum 500,000 shares trading on the stock. That's like basically minimum. So my solution to that rule of thumb is don't worry necessarily about it needs to have 500,000 shares of volume. It has to have 600,000 shares of volume. No, look at the stock, and if the stock is trading like a barcode, it's probably going to trade like shit, okay? Just leave it alone. If you come over to a stock that is not trading like a barcode, it has a better chance of performing well. That alone is going to automatically get you out of 90% of the penny stocks or stocks that aren't going to be favorable to trade on any given day. And then you just got to work through the other 10% and be like, okay, this is probably going to be better than this one. So first and foremost, if you come in on the day and you're looking at stocks and any of them look like a barcode, chances are the volume's really low and it's not going to be something you want to involve yourself. Make sure you're trading on something that has full body candles and it's actually kind of trending and moving. On to the next thing, volume. Actually looking at the volume and using the volume. See, people put this on their chart and then they don't even use it. It's like, well, what's the point of even having it sometimes? So I will do my best to show you guys what I have learned over the years of trading that you can use in regards to volume. So there's a couple things that we look for. One, if we're in a long move, we're hoping to see the volume increasing as we go up in the direction and same color. So example here would be you buy long down here, next candle, volume's higher, following candle, volume is higher. Volume is trending up in the direction of the move. It can be a good sign that you're going to have continuation, okay? That is one thing that we look for. The other thing that we look for sometimes is volume confirmation. See, some people might look at a stock and wait for, and I'll draw on the screen here. Some people might look for a stock to kind of go up and then bounce and then put in a higher low, and they'll say that that is their confirmation to maybe get into a position. Whereas many times, we can use volume to confirm to stay in a trade, to hold on to a trade, to get into a trade, exit a trade. So what we're going to talk about is volume confirmation, okay? So here, a lot of times traders would have not have entered, and let me kind of shrink a lot of this down here so we can make this a little better. So take this first 1 minute candle today on MTP. Many traders may not have got long here, right? And then you see the next candle goes red, and what happens? We have a red volume beat over the previous green. Okay, you will see that this red candle is higher than that green candle. We would call that a seller volume beat. Okay, stay with me. Okay, see how the next one goes down, but then what happens here? We get a green candle to beat over the previous red. So in theory, this would be more of the strong candle to be entering on right about there, because we have done what? We've done two things. We've kind of broken over these previous 3 candles. So we've kind of created a new high there within those 3 1 minute candles. And then also, we have successfully had a green volume candle beat our previous red selling candle. So that can kind of be like strength to the upside. The buyers are successfully out beating the last bit of sellers. Okay? And so now you would say to yourself, well, Connor, how do we stay in this whole trade? I mean, how do we not get it? I mean, there's a lot to that I can't fully teach in this video, but if you were trying to look at volume to help you stay in the trade, this is what you would look for. So you will notice that we get our green buyer beat, okay? From that point forward, there will not be a red selling signal candle in regards to volume all the way until, honestly, I don't even know. We'll keep looking for it, but ready, watch. So green goes up, then we have a red. But does red beat the green? No. Okay. So then we're still in a green bullish trend. Okay. Just because this one's lower, that's not how it works. Okay. It's like this. Red did not beat previous green. So we're still in a stronger move. Okay. Then we go back to green. Then we get a red, but red does not beat previous green. Okay, trend continues. Trend stays up. Then we go down, have more green. Reds do not beat previous greens. Okay, then we have what? And then look at what happens afterwards. All the buyers beat out the previous red, right? The buyers beat out the previous red. Okay, let's continue. Green. The reds maybe beat us there, but slight, right? So no seller beat there. Okay. Then we come in here with the volumes, and the volume squeezes back up again, okay? The reds, arguably, I mean, greens are back to beating reds, okay? Then we go to red, and then guess what? Red does not beat out green, okay? Then we go, red does not beat out green, etc., etc., etc. You guys are starting to get the point. But what happens here? We get green, and then we get what? A red volume beat over the previous green. That to us could be a signal that the volume is starting to shift a bit. We might start seeing a little bit of shift in momentum, or sellers might actually be a little bit heavier in this location or starting to become more relevant. Okay, so now let's go ahead and let's fast forward a little bit. What ends up happening after our first seller candle beat over the previous green? We go up a little bit more, and then we end up fading out. Okay? Now I can tell you, you wouldn't have been able to predict all of your entries and every single exit solely by just looking at that candle and volume. There's more to this game than there is just volume. But that's a big piece of the puzzle, okay? Because the volume are people. That are executions. Those are trades. Those are buy lows. Those are sell highs. Or wait, buy low, sell highs, or probably more frequently buy high, sell lows. Okay, so all of those little bits of volume, those are a big piece to the story, right? Because those are actual people like you and me, trading, making executions, making decisions, okay? And that volume is all the decisions we have made, okay? And that really tells you a great deal because you can see that we've had that buying strength. The sellers are not beating the buyers. The sellers are not beating the buyers. And all of a sudden we get a seller to finally beat a buyer, and then not too long after the trend shifts, okay? There's more to it that I could talk about exactly, how this move went up and then it came down, but we're sticking to just volume now, okay? There's another very important lesson I want to teach you guys. This is when volume dries up, okay? So think about it like this, okay? Literally, like think about it like this. You had a sponge, it was really wet, okay? There's a lot of water coming into it, so there's a lot of activity. There's a lot of water flowing through this sponge, okay? And it's juicy, and it's all juicy, right? It's wet. Then all of a sudden, you leave it out in the sun for 2 hours, and then later it just kind of slowly brittles up. It gets a little dry, and it's all dried out, and there's no more water. It can't do anything. It's like shriveled to the bone. It's stuck. It's stiff. Can't do much because there's no more water to make it expand, and it's all dried out, so it can't really shrink anymore. It's pretty much stable, okay? And then you would need to get more water into the sponge to make it expand, okay, and create that kind of life again. Same thing can happen in stocks. And I had to use that example of a sponge. As weird it is, I want to show you guys the stock EQ. And the reason I gave you that example is because I don't think there's anybody that's watching this video that's never held a sponge in their life or hasn't watched an episode of SpongeBob SquarePants and seen him dry out, right? At some point, a guy always gets dry, right? So here we are. This is the stock EQ. We're gonna look at like a 15-day, 1-minute chart, okay? And the whole purpose is really just to get us back to its really big day, okay? So I want you guys to think of this move as a sponge, okay? The sponge is going up, it's getting dipped in the water, it's getting all soaked, and it's getting heavy, and there's a lot of water, and then guess what? It cannot soak up any more water. It has reached its limitations of soaking up water, and guess what? The water starts to sell out of it. The water, it gets stuck in the sun, it starts to sell out of it, it washes itself away, the water leaves the sponge to the point where the sponge dries up. The sponge becomes stiff. There is no more water. There is no more liquidity, no more water left in the sponge. It cannot get any stiffer. Go down. It can't get any stiffer. There's no more water left to squeeze out of it. It's dried out. Okay? And then, as you put more water back into it, it expands. And obviously, a sponge can only expand so big, it wouldn't make sense for the sponge to get bigger than it was the previous time. But let's just act like the sponge is like working out. You work out a little bit, your muscles get bigger, they keep getting bigger. So this time it can actually expand a little further. Blah, blah, blah. Okay? The key takeaway is this. Okay? All this volume and all this was the water going in, right? And then as that water and that volume exited and became much, much smaller than what it was previously trading at, all right, then the volume comes back in, because if it's not going lower, we try to go higher, and then boom, it's off to the races, and you can see all that volume comes back in. So the key takeaway for this is if you've ever found yourself following a penny stock, and then the penny stock kind of just trades sideways all day, and then all of a sudden just pop out of nowhere. Normally what happens, you can think of it like a sponge gets a bunch of water, and then you sit it outside, and all day long, all the traders just slowly funnel out of there, and then there's no more sellers left to take it down. So if we're not going to go down, let's try going up, and then bam. So that's what I call when the volume washes out of a stock, and then obviously if there's no one trading, right, there's no volume, okay, a lot of times all it can take is just one reaction move in one way or the other to kickstart a big move. And there's more to that we can't teach in this video specifically, but hey, you get the point. So here's a good example, and you can see how the volume was really big, and then it just kind of faded out, right? It just kind of went a little bit lower. And it was still a lot of volume, mind you. That was a lot of volume still trading there, but still a lot less volume in comparison to where we were. So big volume shrinks down to basically nothing, and we just trade sideways for like 2 hours. Even while we traded all that volume. So all of this volume, hundreds of thousands of shares still, and we can't go lower? Okay, let's try going higher at least. Okay, bam, bam. Okay? So think of that one. When volume seizes up and there's no volume, so we go from like big volume to like thin volume, and then the stock is just trading sideways. That can be a signal or an idea to keep watching it because there might be a big move coming. Okay? Now I want to teach you guys the next thing. So this is what you guys are used to seeing on my chart whenever I am teaching or doing our morning breakdown stock stream Monday through Friday, if you guys would like to join in at 8:30 a.m. So I'm going to go ahead, and this is a custom designed volume system that we have created at Boiler Room Trading. So this is what you guys are usually seeing on my chart. And I wanted to explain this for you because there's a reason we created it. Remember how I told you that if the volume of the red candle doesn't beat the green candle, then we can still stay in? Well, there's obviously many situations in the market where that doesn't hold true, right? So we created this custom scanner that can help us, or custom volume scanner that can help us differentiate between the buying and selling volume, okay? So now, instead of us looking at the candle and going, okay, it's red, and then the green's about to beat the red, we can look at the candle and we can decipher how that action looks. So in this candle, we had a little bit of buying action, but most of it was still selling action, okay? And then as the trend goes down, we can say to ourselves, we might be getting ready to go long even on these green, or even on these red candles. Or sorry, excuse me. Yeah, we could want to be going long even before any of these big green candles, because we can see as this is going down, the buyers are stepping in, right? You can see how these candles are going down, yet the buying is coming in on the bottom of that. So we can actually see the shift in strength sometimes before it's even a green candle. So we can start to see the shifting to bullishness on a red candle before we even get a green candle. And so this is really something that we designed over the past couple years. It's really helped us. And then in between that, we have the red dotted or green dotted or red dotted lines. Those are for relative volume spikes. So that basically tells us that, hey, Connor, this might be getting ready to go long. Maybe start sizing a small position. And then that bang, that's when most of the market figures out it's a bounce, because then they all jump in and squeeze the stock. The relative volume spike, there has been a dramatic increase in volume. So the goal of our ultimate volume scanner is to A, help us give us some extra edge about being in or sizing in sometimes before the trend actually kind of reverses. And then also noticing when we get relative volume spike, because that tells us that other traders, or there's just a lot of volume all of a sudden taking activity in the market. So if we start to get a bunch of these green relative volume spikes in a row, it's a good sign that obviously trend might continue for us. So a good example of this would be if we went over to MTP, you will probably notice a significant amount of green volume spikes in the morning here, okay? So we have 1, 2, 3, boom, and then we go on like a nice trend. And then you can kind of see here we had 1, 2, 3, but look, we didn't trend very nicely, right? So Connor, is it reliable to say that you get 3 of these kind of in a row and then we can have a trend because you got 3 of them in a row here, and then guess what? It didn't really trend very well. Okay, doesn't matter, right? Because the volume spikes there, they're not supposed to tell you that the trend's going to go one way or the other. That's supposed to tell you that there is a strong amount of activity taking place at that moment in time. Whether or not all those people taking activity at that time are going to be right or wrong is irrelevant. Okay, the volume spike there is to tell you that, hey, hello, there's a lot of activity here. It's not to say, hey, hello, take a trade. Okay, it says that there's a lot of activity. And how many times have you seen traders be right? And how many times have you seen them be wrong? So again, those relative volume spikes is tell you activity's taking place, not that they're going to be right or wrong, okay? Think about it like that. So that is our ultimate volume system, and I just want to clear that up for you guys because I always get a lot of questions on it, and I want to help you guys understand what it is you are seeing on our screen throughout our daily streams and whatnot. So hope you guys liked the video. I hope you guys learned something new from this video. The key takeaways are, if you want to see a quick investment or a quick return on your investment, you're going to want to stay away from stocks that have a look of a barcode. Okay? If you want a quicker investment, you're going to want to look for stocks that are obviously trading on higher volume, and you're going to want to look for stocks that are trading in nice patterns, full candles, full bodies, okay? High volume is going to be in the millions, right? Again, rule of thumb, minimum volume in the market is like 500,000 to even pique your interest, okay? So again, if you come across stocks pre-market, look like a barcode, leave them away. The ones that don't, those are probably the ones to stay. All right, guys, everybody have a great day. Hope you guys enjoyed the video. Make sure to hit the thumbs up video so we can get this going around. It's actually the thumbs up button, so hit that, and then we'll keep making videos for you guys as we normally do. So I appreciate you guys tuning in for the day, and I'll see you guys on the next one.